Welcome to the reading of the Monetary Policy Statement for the month of February 2025.
Speaking at the release of the Monetary Policy Committee statement for February 2025, Dr. Atingi-Ego, the Deputy Governor, Bank of Uganda, noted that while Uganda's economy remains resilient, the overall risks of the country's growth outlook are skewed to the downside.
Inflation could be higher than projected if 1. The domestic growth is stronger, driven by increased investments in the extractive industry, particularly mining and drilling, and effective government program implementation. Also, the geopolitical conflicts could escalate, disrupting the global supply chains further. In addition, extreme weather events and long-term environmental shifts affect agricultural output, which could result into price hikes.
In response to the prevailing economic conditions, the central bank has therefore decided to maintain the central bank rate at 9.75% to support economic stability.
The rediscount rate is 12.75% and the bank rate is at 13.75%. The MPC believes that the current CBR level is adequate to control inflation while fostering Uganda's economic growth and socio-economic transformation.
The central bank also expressed concerns about the potential impact of global economic shifts on Uganda's economy. Specifically, spending cuts, new tariffs and policy changes by the US government are being monitored for their possible impacts.
Core inflation remains elevated in US, and so the challenge with that, or the effect of that on Ugandan economy, is that you tend to have a situation where portfolio investors who wanted to bring in money would say, okay, if the Fed is likely to maintain their rates high, why should we bring the money into Uganda? Like a pause in terms of capital inflows.
Exchange rate. Also, it depends on the import content of some of these aid. If the import content was quite big, maybe it may not. But if government were to take on board some of these services, it means that the demand for foreign currency to continue the importation of this would go up. And depending on the magnitude, it could have a slight impact on the currency.
Despite these challenges, Bank of Uganda remains optimistic about Uganda's economic outlook. The economy is projected to grow between 6 and 6.5% in the financial year 2024-25, with expectations of 7.0% growth in subsequent years. Maureen Babidi for UBC.